Friends, we will continue with the chapter of penalties and prosecutions. Of course, there are two more explanations which we need to do in 271(1)(c). However, those two explanations, since they are connected to this particular search and seizure, we are going to take up those two explanations along with the section 271(AAA). Friends, normally under section 271(1)(c), what we observed is penalty can be levied to the tune of 100% to the maximum of 300% of tax sought to be evaded. In 271(AAA), what we would like to cover, first of all, a general understanding in case if you are getting, then specifically you can make a note of it. See, let us suppose for the financial year of 2010 and 11, the assessment year is 11 and 12. A particular SSC's case is subjected to the tax audit. Then what is the due date? Naturally 30th/9/2011. Now the point of interest here is, let us suppose search is taking a place somewhere in the month of June. That means for the financial year of 2009 and 10, for the financial year of 10 and 11, still there is a time to file the return. Still there is a time to file the return of income. In that situation, what we say, that is, in case if at the time when the search is happening, if a statement is issued under section 132(4) and SSC informs what is his undisclosed income and substantiate how that undisclosed income is derived and pay the tax and interest on that, then no penalty will be levied. Similarly, with respect to the undisclosed income, everything is being recorded there in the books. Before the search proceeding commences, everything is being recorded in the books before the date of the search. Then also you cannot levy the penalty is the point. Under section 271(AAA), you can't levy the penalty. But your 271(AAA) says what? If still there remains an undisclosed income which they found by making the search, and that undisclosed income pertains to the previous year, in respect of which due date for filing is not yet over, then they can very well levy a tax to the tune of 10% of such undisclosed income. In saying so, what is the underlying objective? See, normally if undisclosed income is found in a search proceeding, other than the previous year in respect of which still due date for filing is there, in respect of all that undisclosed income, they can very well levy penalty from 100% of the tax ought to be evaded to 300% of the tax ought to be evaded. Why so lenient view is given here under section 271 AAA. See, normally also, if a search party comes and they are making the search, we will always be pretty confident on one thing. In respect of a previous year, for which still there is a time for filing the return, you can't say that I made some undisclosed thing, because accounting entries can be passed subsequently also is what who feels? The SSE feels. What the tax law feels? Yes, if you are not going to do the search, probably as a practice you are doing it. But in spirit, what is it? When there are accounts, any time I can come and check your accounts. You should keep them updated or not? Naturally. So even after our coming, you should have made a proper disclosure stating that this is what I have not shown in the books. Before I caught, you should have told, for this I have not passed the entry, sir. Now I will make the entry passed, and I will duly pay the interest and the tax thereon. Because there is a concept called as advance tax concept, na? So you failed to pay that advance tax. We started the search. We have not found out that income. You yourself came and disclosed that particular income and paid the tax and interest thereon. Then yes, we will give a lenient view. Only with respect to what? That particular previous year, in respect of which due date for filing the return of income is not at over. But we came, we saw, you have not opened your mouth, we found that undisclosed income. Yes, your contention is very much right that still there is a, what is it, time for filing the return. But out of our efforts, we were able to find out the undisclosed income. So we will levy the penalty under section 271 AAA to the tune of 10% of such undisclosed income. Now this discussion should bring some clarity in your mind. When 271 AAA can be invoked and cannot be invoked, and this particular 271 AAA is applicable only for one particular situation. What is that situation? First of all, 271 AAA penalty is applicable only to a situation where, in respect of a particular previous year, still there is a due date for filing the return. Before the due date for filing the return itself, search commenced. For that situation, 271 AAA is applicable. Now, under 271 AAA, when penalty cannot be levied, when it can be levied. When it cannot be levied, in case if the SSE voluntarily come forward and discloses by way of a statement under section 132(4) regarding the amount which is not shown in the books of accounts, and sincerely makes the payment of the tax and payment of the interest, then you can't invoke 271 AAA. But in case if you don't record the same in your books, you don't make a statement, you don't make the payment of tax and interest, and we found out that particular undisclosed income, yes, 271 AAA says, notwithstanding anything, 10% of such undisclosed income can be levied as a penalty is what it says. With this clarity, we are supposed to get into that particular 271 at AAA. In simple words, please write down 271 AAA, 271 AAA, and by the side of 271 AAA hyphen, new law of penalty, new law of penalty for concealment of income, for concealment of income in case of search and seizure, in case of search and seizure. First, applicability, side heading applicability. It is applicable, it is applicable in respect of undisclosed income pertaining to a particular previous year, just ended before the date of search, and in respect of that previous year, due date for filing the return, under section 139(1), has not expired, and the SSE has not furnished the return, before the date of search, Now, quantum of penalty, make it side heading, quantum of penalty. SSE shall pay by way of penalty at the rate of 10%, of the undisclosed income, related to the just concluded previous year, in respect of which search commenced, before the due date, for Search has been commenced before the due date. So with this, friends, you are clear with when 271 AA, triple A can be invoked and what is the quantum of the penalty. But what is most important at the final level? Knowing under what circumstances 271 triple A cannot be invoked. Write down. Under the following situations, (271 triple A cannot be invoked. 271 triple A cannot be invoked. Number one, in the course of the search, through a statement under section 132(4), SSC admits the undisclosed income and also substantiate the manner in which such income has been derived and pay the tax together with the interest, on undisclosed income. And one more situation where 271 triple A cannot be invoked is, second point you write. In case if undisclosed income is recorded, on or before the due date of search, in the books of accounts, before the, not due date, before the date of search, in books of accounts, and it is disclosed to the commissioner, before the date of search. That means he has not paid on that any advance tax or interest, but before the search commenced itself he has informed that yes, I got undisclosed income and I am passing the entries in my books, बोल के voluntarily disclosure दे दिए search commence करने के पहले ही. So in any case, the whole point is clear. If SSC gives the information regarding the undisclosed income, then no penalty under 271 AAA. pertaining to the undisclosed income of the previous year just concluded before the search gets commenced, in respect of which due date is not yet over. But however, penalty can be levied under 271 AAA in case if the search party founds the undisclosed income and the party is not making a voluntary disclosure, then only 10% this lenient view is given for the simple reason because the due date for filing the return is not at over. This is the point that should go into your mind. Then, of course, friends, one important thing that should go into your mind is, let us suppose they invoke 271 AAA and levy a penalty of 10%, then they cannot levy the penalty under 271 1C with respect to that particular income is a point. Now we are moving again back to the 271 1C and we are trying to look at the explanation 5A2 section 271 1C, that is a deemed concealment. First you understand what is this deemed concealment. And for addressing which issue this explanation is being inserted. As a final student, that is most important. What might be the possible reason for their including this particular explanation? See, basically this explanation is aimed to address an issue wherein, that is, previous years are ended before the date of the search and the due date for filing the return of the income of such year has expired and the SSE has not filed the return. What is it? This explanation is applicable to those previous years which are completed before the search get commenced, and in respect of those previous years, due date for filing the return is already over. Then what we say, SSE even after due date is over not filed the return, and what the SSE has done is, search commenced, immediately he rushed and filed the, what is it, returns after the date of the search. If that is the case, even if he files the return, still whatever shown in the return could be well construed as undisclosed income. This is the whole lot of purpose with which explanation 5A is being inserted. Because some people, what they are doing, after the search get commenced, they go and file the returns in respect of those previous years which are concluded and in respect of which due date for filing the return is already over. Search commenced, they go and file the return. See, 271 AAA situation is different, and what we are discussing through explanation 5A to section 271C is different. That is, 271 AAA situation is what? Search commenced before the due date for filing the return, and previous year is over but due date for filing the return is there. In between these two dates search commenced, So in that situation, in case if the SSE voluntarily discloses by making a statement and by paying the tax and interest, penalty should not be levied, and if he don't disclose, then 10% of the undisclosed income which they found will be levied. But here what is the issue? Definitely a different issue than what we have studied in 271 AAA. In explanation 5A, what they said, once the previous year is concluded and once the due date for filing the return is completed, after the search commenced, in case if you are filing your return relating to a particular previous year which is concluded, for which due date is also over, then although you have disclosed before the search party identify that particular undisclosed income, still it shall be construed as a deemed concealment only. Write down explanation 5A2 section 271 1C. Explanation 5A2 section 271 1C. So this is applicable to which situation? Applicability. Previous year got concluded and due date for filing the return is over. Due date for filing the return is over. And the search got commenced. And the search got commenced. And SSE is filing the returns relating to those previous years after the commencement of the search. SSE is filing the returns related to those previous years after the commencement of the search. Then next point is deemed concealed undisclosed income. Make it side heading. The income disclosed through the returns as stated above shall be treated as deemed concealed income. Then of course, with respect to that, they will levy the penalty under section 271 1C. Right. Now we are moving to the another situation. What is this situation? Explanation 5A to section 271 1C. There is a addition which is made by the Finance Act 2009. Friends, try to understand. As the department, as the government thinks of addressing a particular issue, the intelligent tax planners, tax consultants are finding another loophole. Which loophole to cover? Again they have to amend and include something more. So whenever you study the law, with this intention you have to study. That is, Income Tax Act started in 1961, and this particular insertion is made through the Finance Act of 2009, means these many years this address is not being, this issue is not being addressed. That means over intelligence and tax planners' criminal brain of defeating the purposive intent made this particular law to be so complex. So what is this particular issue? What is being done with Finance Act of 2009? ये क्या चीज होता बोले तो, that is, search is initiated after first day of June 2007, and then that is this is pertaining to which previous year? That is previous years which are concluded before the date of the search, and the due date for filing the return therein is over if that is the case. Let us suppose SSC filed a return. Earlier what we have discussed is SSC not filed the return. But through this what we would like to address is a revised return is filed. Try to understand the point. Search got commenced. Already you have filed a particular return with respect to the previous years which are already concluded, and after the search commenced you filed a revised return. Still there is a time to file a revised return. Revised return can be filed up to what time? 1 year from the end of the relevant assessment year or before the assessment got completed. तो ये बोल के whichever is earlier. ये सोच के एसएससी क्या करे? Yes, if they caught, then I will try to disclose, otherwise till such time happy well I can keep my undisclosed income with me only. सोच के पहले actually when his income is 10 lakhs he only filed a return with 2 lakhs. The moment the search commenced, what the criminal idea he has got? Yes, in respect of that one particular previous year, still there is a time to file the revised return. उन्हों आ गए, उन्हों पकड़े तो कैसा होता? वो सोच के रिवाइज रिटर्न डाल दिए. Then this explanation says, yes, if that is the case, whatever extra you are showing through your revised return shall be deemed to be concealed income. So you will have enough problems if a search is initiated against you. Got it? That is, 3 situations we are with. What are the 3 situations we are with? One is previous year is over, due date is not over, being addressed by 271 AAA. Previous year is over, due date is also over. Originally you have not filed your return. After the commencement of the search you are filing your return. Third situation which just now we have discussed is, previous year is over, due date is over, originally you filed your return, now after the commencement of the search you are filing a revised return. दोस्तों, ये 3 सिचुएशन में क्या हो रहा, आप रिटर्न डाल रहे, जब डाल रहे, आफ्टर द सर्च कमेंस्ड. One pertains to the previous year for which due date is still there. Second pertains to the previous year is over, due date is over, original return is not filed, now you are filing the return. हरी भरी आके. तीसरा क्या है, रिवाइज रिटर्न. So second situation is a belated return, third situation is a revised return. So once the search gets commenced, if you are filing a belated return, we can very well say whatever you have disclosed through that particular belated return is a deemed concealment. Similarly, even if you are filing a revised return, we can still say that what extra you have shown through the revised return shall be deemed to be a concealment. Third situation likh lo, that is, in case previous year is concluded before the search and due date for filing the return is over, and SSC already filed the return, SSC already filed the return, there you write original return, already filed the original return, and now after the commencement of search, he is filing the revised return. Then in that situation, whatever extra he is showing through that particular, whatever extra amount of income he is showing through such revised return shall be deemed as what? Shall be deemed as concealment or income concealed. तो दोस्तों लिखने का जरूरत नहीं, सुनो. To understand what all that we have studied, situation to situation चलेंगे हम. Search is initiated on 20th June 2009. For all the 5 situations now which I am going to take up, what is the date of search? Just write by the side. Search is initiated on 20th June 2009. 20th June 2009. अब देख लो. Just concluded previous year is what? Just concluded previous year is 31/3/2009. Still there is a due date till 30th/9/2009. Date of filing of return of income is 30th/9/2009, and on that particular due date SSC filed a return disclosing that particular undisclosed income. If that is the case, this case is a fit case for 271AAA, where what is it? A penalty will be levied to the tune of 10%. See, SC is filing the return on which date? On 30th/9/2009. After the search party found out the undisclosed income, he is filing the return. That means 271AAA has got a perfect application. Then friends, previous year 31/3/2010, let us suppose 31/3/2010 बोले तो सर्च कब हो रहा? 20th June 2009 हो रहा. So that means previous year commenced. Previous year is on 1st April 2009 to 31st March 2010. Just after the commencement of the previous year, within 2 months the search started, and then on 30th 9 2010, what is it? He simply declared that particular undisclosed income. He declared the undisclosed income means 271 AAA gets, what is it, applicable, and penalty. Here try to understand, is the penalty is applicable or not, either in the first situation or in the second situation which we have discussed. Before the search party found out that particular undisclosed income, you make a voluntary disclosure by making a statement under section 132(4). Then 271 AAA says what? No penalty can be levied is the point. See, that means for the same two situations which we have discussed, if they found the undisclosed income and later on you are filing your return, then 10% of the undisclosed income penalty should be levied. And in the reverse situation where you made a declaration and in that situation there is no penalty under 271 at AAA is the point. The other two situations already we have discussed. Explanation 5A to section 271cc. Previous year is over and due date for filing the return is also over, and subsequently the SSE is filing either belated return or revised return, he cannot escape the penalty under section 271cc, which could be 100% of the undisclosed income or 300% of the, what is it, which may be extended to 300% of the not undisclosed income. 300% of the tax ought to be evaded, or 100% of the tax ought to be evaded to the 300% of the tax ought to be evaded. With this, I conclude this particular 271 1Z and 271 AAA is the point.